Hi everyone, I'm back from holiday and I need to do an update video of my current live trades. But what I wanted to do in this video was just make a point. I'm always making the same point about edges and simple edges, which I think often overlooked because they're a bit uncomfortable to trade. I think essentially all edges are going to feel uncomfortable to trade, and that's why the majority of traders don't make profit, because they tend to slide back into their comfort zone, their own parameters of their knowledge. Okay, so for instance, if everyone you talk to and everything you read says a certain approach is where you should be looking, and a certain way of managing trades is what you should be doing, it's very hard to look outside of those boundaries and believe in them. And as everyone knows, I'm always banging on about the easiest edge to exploit is risk to reward. And the problem with that is it pushes you into uncomfortable areas. Okay, so if everyone's saying 0 to 15% drawdown is where you should be, and anything outside of that is never taken on board or considered, it's very hard to look at systems with high drawdowns. But you have this symmetry in trading, which says that if you want low drawdowns, you're going to have low returns. Okay, so what people tend to do is they want low drawdowns but still expect high returns. So they work in that comfort zone of having the low drawdown, but when they realize that for 3 months, they've traded for 3 months really well and only made 4% return, they then get uncomfortable with that. So, they tweak again. So the point here is that you need to step out of your comfort zone. And this is a strategy that I posted a few years ago that kind of emphasizes my point, because this takes you very much out of your comfort zone. It trades in a way that's very difficult to believe in, and it's one of those strategies where people will look at the results and say, it's a great system, but nobody's going to be able to trade like that. And when someone says something like that, you kind of have to kind of invert your view of it. So what they're saying is, nobody would trade like this, but the returns are really good. Well, really what they're describing is a brilliant edge, because if you're doing what everybody else is doing, you're not going to make money, because you need to beat the competition. And if you have a strategy that makes high returns and nobody wants to trade that way, what's it saying to you? It's saying that you have a unique edge. Okay. So anyway, here's the system. It's really simple. It's traded on the 1 hour chart, and the first thing you're going to do is put a 1000 period moving average on there. Okay, so instantly we're going way out of the status quo. Move a 100 period moving average is considered slow. Well, this is a 1000. Again, invert your thinking on this. This is 1000 period moving average on the 1 hour chart. But what is that on the weekly chart? Okay. If we just flip to the weekly chart for a minute. Okay. Zoom in a bit. I think this is a 20. Yeah. This is a 20 period moving average on the weekly chart. Okay, and you see how it captures quite nicely the trend in periods. Okay, but on the 1 hour chart, that's a 6000 period moving average. Okay, so just invert your thinking and try to do stuff that everybody's not doing. You know, if everybody's doing it, there's not going to be any edge there. Okay, so I'm just going to take these objects off the charts because they're just going to make it confusing. Okay, now remember, I'm not saying this is the precise, perfect trading strategy. What I'm saying is, let's look at the bigger picture, the big ideas. So with the 1,000 period moving average, all we're saying is we're looking at long-term momentum. Okay, so we're going to use long-term momentum to determine the trend. That sounds much more easier to buy into than put a 1,000 period moving average on your 1 hour chart. Okay, the big picture is what's important here. Okay, so we're saying look at long-term momentum for trend. Okay, now once you've determined the trend, I'm just going to have to put a weekly separators in here. So I don't know the start of the week, but generally it doesn't make any difference what the start of the week is, okay, on this chat. But for the details of the strategy, it's important. I've picked one right where it's crossing over the moving average. That's going to make it confusing. Okay, so let's presume this is Monday. We're above the 1,000 period moving average. Okay, now we're going to look to buy the low of the week. Okay, trend is up. We want the best value entry for this week in that uptrend. Okay. Right, and we're not going to take any notice of the colour of the candles. We're just looking for the low of the week, and we're going to use the 1 hour candles to find that low of the week. Okay, this period is when you're asleep, so ignore that. So this is the first candle you see, so for all intensive purposes that's your low of the week. Okay, so you set a buy at the high and a stop loss at the low. Okay, and for as long as that holds, you're holding the low of the week. If price trades lower on the week, okay, it stops you out, then you repeat the process. If it stops you out again, then you repeat the process. And then when, sorry, my computer's slowing up a bit. And when you secure a low of the week and it doesn't get stopped out, you just hold it until it gets stopped out. Okay, and you do that right through to the end of the week, and then the next week you repeat the process. If you're still holding a trade at the end of the week, you still repeat the process. Okay, so by doing that, you're trying to find the low of the week. So if we go back to the weekly chart, we pull up highlight. You're trying to secure longs at these points. Okay, and you can see that when the market trends, you're going to end up with really great entries in that uptrend. Okay, you're going to get the low points of this uptrend, which represent the greatest potential for high risk to reward. Now obviously periods like this where it goes sideways, you're going to give back, you're going to lose. You're going to have long periods of drawdowns and just losing. Okay, so what you need to do is, when market conditions are favourable, in line with the strategy you're employing, that you're going to make enough money. Okay, and the easiest way to do that is to trade high risk to reward. Okay, so on this example, let me just find a trade that survives and goes on for a bit. Okay, bear with me, sorry. Okay. Let's assume that we get this low of the week over here. Okay. Now the exit and the management is just a 10R trailing stop. Okay. So with this entry here, when you get to 10R, you move to break even. When you get to 20R, you trail at 10. When you get to 30, you trail at 12. When you get to 40, you trail at 30, and so on. Okay, just a simple 10R stepped trailing stop. Okay, and again, this isn't because this is the best trade management or there's something particularly magic about 10R. The point is that you're going to capture some very big wins. You're ensuring that you're only trading high risk to reward, okay, with a lot of upside potential. Okay, it has potential to go on and on, obviously, because you're giving it plenty of space. But it's just to highlight again the big idea that what a difference risk to reward can make in with your results. And that's it. That's the system. Okay, it's really simple, and you can vary it. You can do a 600 period moving average and 5R. You can even tweak the entry if you like, but the whole point with the entry is it's inverted thinking to what most people do. Okay, most people, what they want to do is they want to zoom in, okay, and they want to look at 7 or 8 bars and think that is significant of what's going to happen on the next 6 weeks, okay, or what's going to happen on the next 6 bars. And there's very little evidence to back that up. Doesn't mean that it can't be done, but the people that are able to do it have a specific skill. And what most of us like to do is we have this kind of overconfidence that, let's be honest, we all think we're great traders, okay? But the probabilities are that the large majority of you are bang average, okay? And definitely include me in that group, okay? So if the chances are that you are bang average, okay, what you need is a really good edge. And what you need is a simple edge. You need to be doing something that everybody else is not doing, okay? And just have a look at your current trading strategy and the things that you like, and then ask yourself the question, is this something that everyone's doing, or is this something that nobody's doing? And that's going to give you a pretty good idea of how strong your edge is, okay? Because if what everybody's doing has a strong edge, then you've got to answer the question why they're losing. Okay, or maybe they're not. Maybe you believe that everybody's making money. Okay, that's one forex fact that I don't believe. Okay, through my own personal experience of trying for a very long time to even break even. Okay, so that's it. It's a simple system, and it's a system that if you're any good at programming EAs, that you can build an EA, and at the end of it, you might not want to trade that system, but you can think, well, okay, momentum's important, but it doesn't need to be precise. It can be a simple moving average. Okay, the entry is important, but again, really just some momentum in the direction of the long-term momentum is good enough. And maybe you will say, okay, I'm going to take a lower win rate, but if I just kind of give my trades a bit more room to run and use a trailing stop, it's not perfect, but that risk to reward is a strong edge. So that's it. It's something for you all to think about. This isn't a million miles away from how I personally trade. I'd say it's about 2 miles away from how I personally trade. So this isn't all throwaway stuff. It's a really good solid framework of how you can build a simple trend trading system. And don't be fooled. A lot of CTAs and successful long-term traders trade in very similar systems to this. Thanks for your time. Leave me some comments below and enjoy the rest of the week.